Hello, I'm Diane Cupples, CEO of Portfolio Plus. Welcome to the Portfolio Plus podcast series, where we focus on walking financial institutions, fintechs, and startups through the journey of open banking on a cloud platform. In today's episode, we are focusing on the journey from a financial institution perspective, what open banking means to a financial institution, the opportunities they see, and what challenges they may face, as well as where are they on the journey. Joining me today is Don Coulter, the Chief Executive Officer for Concentra Bank. Don is concentrating on strategy to enable Concentra Bank for long-term sustainable growth. In addition to being a bank, Concentra partners with credit unions to provide solutions that support their membership retention and growth. And with these deep roots in the cooperative movement, Concentra is also a strong supporter of the open banking movement. So thanks for joining me today, Don.
Diane, it's great to be here. How are you today?
I'm good, thank you. Very good. And you?
I'm excellent, thanks. Yeah.
Great. Well, Don, I've provided a brief introduction of Concentra to our listeners. Is there anything that you would like to add just so they have a solid awareness of who Concentra is and what your services are?
Yeah, definitely. Thanks very much. And again, appreciate the opportunity to speak with you today. So Concentra Bank is a mid-sized bank in Canada. We're the 13th largest Schedule I bank, and Schedule I means banks that are owned by Canadians or Canadian entities. So we're a mid-sized bank. We have both a bank license and then a trust license as well. And the organization has been around for decades. We changed their name to Concentra in 2005. As you mentioned, our legacy comes from the credit union system. So we started in the prairie provinces of Canada back in the late 1930s. And we were an integral part of the credit union movement in Canada, which coming out of the Great Depression, we were there to help businesses and farmers and others with their banking needs and financial needs. But fast forwarding up to 2005 until today, we've really rapidly changed a lot. So today we continue to work closely with credit unions to help them be successful and their members as well. But we also have a very thriving, dynamic and growing business in banking outside of the credit union system, where we offer mortgages to Canadians. We provide business banking and commercial loans. We have an equipment finance subsidiary that finances construction equipment and transportation equipment, things like that. We have a consumer finance business as well, which is more unsecured lending for different types of things ranging from vehicle finance all the way to home improvement finance as well. And we offer foreign exchange services, securitization services. We actually have an internal sort of treasury consulting practice as well. That's mostly the bank. The trust company does registered plan administration for retirement savings plans and retirement education savings plans. Registered education saving plans. We do trust and estate planning. And we also do some corporate trusts or specialized trusts. Now, the way we deliver our business is somewhat unique in Canada. So we have no branches. We're a completely branchless bank. And we do a lot of what we do through partners. So we have a $11 billion bank and a $30 billion trust company, which is fairly large for our employee base, which is only 400. And so with those 400 people, we partner very closely with fintechs, technology companies, other financial institutions to be able to deliver what we do. We're investment grade rated as a bank, which is an important thing. And we've also been recognized as one of Canada's best managed companies, actually for 18 years in a row.
Great. Thanks for sharing that, Don. I think as we go forward with today's conversation, that history is really going to help through the conversation for open banking. You've got a tried and true tested model with a wide variety of services. So I can see how open banking can play a very important role with Concentra's future. So let's talk a little bit about that. So we've talked about how the movement to open banking in Canada is a journey, which everybody we've talked to agrees. We don't know when we'll come to the end on the journey, but it'll be a constant evolution as we get there. Concentra, so as you've said, you've been founded in the cooperative movement, and You're providing financial services not only to customers, but also to the credit unions. The interesting part about the credit union movement is it has a customer first ethos, a cooperative mindset. Open banking's core purpose is to provide customers with control over their financial data and who can access it. Do you view the customer first ethos as a valuable asset on the journey to open banking for Concentra and for credit unions?
I really do, Diane, because I think open banking is going to provide more what I would describe as democratization of banking. It's going to allow those consumers, whether they're credit union customers or, as they call them in the credit union system, members or banking customers, it's going to give them control of their data. It's going to give them more transparency, going to give them access to their data. And you're right, like the credit union system, year after year is usually ranked number one in the country among all deposit-taking institutions in terms of customer service. So the members of credit unions really enjoy the service that they get. I think a lot of the reason is that those cooperative values and the principles of cooperatives are such that it's very clear that the whole focus is to help the member be successful on their financial journey. I think open banking is going to provide more transparency, as I said before, which is going to allow for, I think, in and of itself, better decision making. And also, I think it's going to spur, I think it definitely will spur more innovation and competition in banking as well, which will result in credit union members and other consumers getting better, I think, applications in which to work and do their banking. So better experience in terms of better PFM or personal financial management tools. I think it's going to allow them to have a better picture of what their overall financial position is. I think the innovation that will come out of open banking will result in many different options for people to bank. Some have talked about, open banking maybe leading to the unbundling of banking services, meaning that traditionally big banks the holy grail for them is to have large share of wallet. So you want to have 8, 9, 10 products for each of your customers. But I think with open banking, I don't know this to be certain, but it may lead to kind of a best in breed approach where there might be one, fintech or credit union or bank fintech partnership that's really good at one part of lending. It could be consumer finance. And they might specialize in that, and it could result in another being very good at wealth management. We've seen some robo-advisors in our country that are very good at that as well. So I think with the credit union total focus on the financial well-being of their member, improving their financial success, I think open banking will give them more choice and more competition, which I think is good too. And I think the transportability, the portability of data is also going to help them potentially to switch from one provider to another. So they'll have more choice. And I think more choice, more competition, and more innovation is always a good thing.
Don, maybe we could clarify for our listeners, why do credit unions call them members versus customers? That's a nuance that's within the credit union movement.
Yeah, so it's a great question, Diane. So if you think of a bank, like in Canada with these big, huge banks, so there's customers, and all of us are probably, most of Canadians are customers. And then there's shareholders. The shareholders actually own the banks, but often those are two different categories of people. In the credit union system, the customers are the owners, and they actually have a membership in the credit union. So if you want to, unlike one of the big banks in Canada, if you want to do business with a credit union, you have to take out a membership. It's not that expensive. It's often $5 or $20. So then you're a member, and so you then can do your business. You can have transactional banking, mortgages, commercial loans, whatever it is you want to do, wealth management. But then you also get a say as an owner, you get a say in the governance of the credit union. You get to vote on the board of directors. You get to give your perspectives on, the future direction. In some cases, you get paid what they call patronage dividends as well. So you're a customer and an owner at the same time, which is different from the banking system typically.
That's a great model. Canada has, let's say, approximately 231 credit unions, and I think it's, give or take 5.9 million members when you look at the stats, depending on the day. Combined, that's a really large group of owners, customers, members within the movement. Do you see that large group coming together as an advantage on the journey to open banking? Is there an opportunity for credit unions to come together and partner?
I really do. So the nature of the credit union system is that there's a smaller number of credit unions now than there used to be. There used to be over 1,000 credit unions, and the credit unions come in different sizes and shapes. So you have some really small credit unions, mid-sized credit unions, and really, really large ones. And in terms of numbers, most of them are small and medium size, and they just, banking is a scale business. The expenditures you need to run a financial institution are quite high. So traditionally, the model has been that credit unions have banded together to create, to fund and capitalize these shared service entities that will provide a lot of the different technology and even marketing, human resources capabilities in a pooled basis. So they don't all have to have, when there are 1,000 credit unions, you wouldn't have 1,000 separate technology companies or 1,000 separate, HR departments and things like that. That's changed a bit because the reality of the cost of, running a financial institution today has gone up significantly. And so out of necessity, a lot of credit unions have merged. So you're seeing a smaller number of credit unions now. But the legacy has been to have these provincial centrals, they typically call them. So you've probably heard of Central One or Saskatchewan Central and things like that. So they're kind of like a holding company that all the credit unions will invest in, and they'll do a lot of the functions, liquidity provider, and some of the other things I talked about before. So built on that legacy of pooling together and the better interest for the greater good, to me, it makes a lot of sense for credit unions to, again, band together, come together to think about solutions for open banking on more of a collective basis. Clearly, some of the credit unions are quite small in smaller communities, and for them to have the wherewithal, the knowledge base, the expertise, the sort of capital and technological investment at scale is just not plausible.
Right.
So I think that coming together makes a lot of sense to sort of manufacture that scale. And I think also just in terms of having a seat at the table and being able to influence some of the directions of the direction of open banking in terms of the standards and the way that the legislation gets rolled out, it's going to be much more effective for those 5.9 million members through their credit unions to speak with one voice, because they have obviously a lot more clout than if they all sort of separate and go on their own. So I think it's a very good point. I think when we look at the rollout and the things that are going to happen in the next couple of years in open banking, coming together makes a lot of sense.
So do you think that the credit union movement and the way that they could come together and share those resources actually gives them an advantage over the larger banks? And if so, why?
Yeah, I think, I've worked both in the banking system, Diane. Okay. I've been a banker with a large bank, as well as I worked for a credit union, and now I work for a mid-sized bank. So I've seen a few things so far in my career. And in Canada, the big banks versus the credit unions is typically seen as a David versus Goliath kind of situation, right? So the Goliath being the big banks, and then the credit unions being the little David. And with that, it's very easy. I could probably give you a list of advantages that the banks have that's much longer than the credit unions. But I think one thing that the credit unions can do is they can be more nimble, they can be more agile, and especially when you come to technology. So I think that open banking is going to spur a growth in innovation, as I mentioned before. And I think you're going to see more success of fintechs as well. Well, who's better to work with a fintech? Some may think a big bank, but the large banks are not always the easiest to partner with. Their technology is complex. They've already got big scale in the way they do things. And so for a small startup fintech to work with those big Goliaths can be intimidating, and it can take quite a long time. I think an advantage that the credit union system has is that they can embrace a partnership with a fintech or a technology company. They can, invest the time because the relative ROI or impact they're going to get is much more significant. So I do think truly that there are some advantages that the credit union system will have with open banking over the big banks for sure.
Oh, that's great. You've keyed on a point there, access to fintech and technology partners. How do you see working with partners evolving in the future as open banking becomes more widely adopted? You've hinted that the credit unions might have the ability to work more agilely and actually take advantage of newer fintech faster than the banks. So what would you be looking for in a partner today and then to help you in the future as you grow?
Well, I heard someone speak about this recently in their open banking and credit unions and banks and fintechs. And, the thinking went to, in the future, the relationship that banks have with developers, coders, computer scientists, those who can develop code is going to be actually a critical success factor for them to move ahead. So if you think about that, banks typically don't have a huge amount of technologists inside their company. They have people running architecture and operations, kind of the core, the network and things like that. But in terms of developing new innovative applications and different types of ways of banking, they don't have a lot of those internally in their organizations, but they need them. So obviously they're going to have to partner with organizations, whether it's fintechs, as I've mentioned a few times, or technology companies, in order to have that synergistic, 1 + 1 = 3 partnership, so that they can get into market more quickly. So to me, it's going to be very, very critical. And also, when you look around, where we are today, hopefully at kind of the end of the pandemic, we're seeing this massive, fourth industrial revolution of digitization that's happening all around us. So what that is actually resulting in is a shortage of technology people. So companies are finding already today that as they want to digitize their agenda and their business model, it's hard to find that talent that was always scarce in technology in this country has become even more scarce. And I think a forecast here would be in the next 3 years, it's going to get much, much more scarce. So the ability to hire these people into your banks is going to be challenging. And so I think getting strategic partnerships with technology firms, leading tech providers is going to be critical. And I would say right now, do it now before it's too late.
Fair. So let's switch gears a little bit. Concentra offers a wide range of products and services. You have, you've said it yourself that open banking will allow us to bring different, innovative, and unique products to market. We spoke about it through fintech partners, technology partners. So let's take a look at what it means to servicing side. So Concentra does servicing on behalf of, as we've said, credit unions, brokers. You've got a wide variety of different business verticals that you support, as you outlined at the beginning in the introduction. How do you see the adoption of open banking supporting the servicing side of your business model? And where do you see some opportunities or even some challenges?
Mm-hmm. Yeah, it's a good question. I think, I'll get to open banking in a moment. I think when we look at like our strategy at Concentra, we're a bank that's owned by the credit union system that serves both the credit unions themselves and their members, as well as the Canadian public and Canadian businesses. So we're quite intertwined, and we essentially have had for some time, although we don't call it this, a platform strategy, where we have, if you look at the credit union platform that we have 230 credit unions that we service and sell products to, and we're able to tap into our ecosystem of specialized mortgage providers and specialized banking providers to be able to connect those two together in our platform. Pardon me. And as we grow that, there's network effects as well. And so we have to service that relationship, and we need to have great technology to do it, because the consumer wants that Uber-like, slick, seamless experience in how we service our platform and how we provide the great products that members of credit unions want and non-credit union customers as well. Now, open banking, I think, creates a pretty intriguing opportunity because it will, I believe, allow us to provide product propositions for people that they can gain access to more easily. Today, there's some stickiness in a relationship. It's sometimes difficult to move away from your bank. If you're a business, for example, you often don't leave unless something bad goes, something bad happens, or you're growing or something like that. But I think with open banking, it makes the portability of the customer much more easy. It's much more easy for it to happen. So I think that when we're servicing customers, getting the ability for customers to move more of their products is something that's quite intriguing. And I think also just having more data and better, rich, robust data allows us to move more on a more agile basis, more quickly. If we're looking at things like mortgage decisions, having better data and more granular data allows you to measure the risk much better, allows you to price the risk as well. And so I think it can actually be a facilitation to speed of transactions, ease of service, which is really what customers want. And overall, again, I go back to what I said earlier, Diane, overall, growth in kind of options and how you would bank. So I think we're certainly focusing on that, the servicing perspective, and thinking about it as we sort of chart out our strategy for open banking.
That's great. That's great. So as you know, Portfolio Plus is on our journey to the cloud with our open banking solution. The driver behind that was really to enable us with the ability to deliver more efficiently and frequently. And it also sets the stage to support our customers in their digital transitions or transformations today and preps for open banking in the future. We're currently targeting a API release every 30 days so that our customers can have access to it and be as responsive, and to use your word, agile, as much as possible to be prepared for their markets. We've talked about how it will help your servicing side. You've got offices in Regina, Saskatoon, British Columbia, Toronto. I think you're well across most of Canada. What about your internal business opportunities for Concentra? So does open banking and APIs provide any efficiency to your team in specifically that supports your 400 employees that are going to service your customers? Does it help you there at all?
I think it does. So we have a number of fintech partnerships. Some are customer facing and some are more embedded internally in the company to help us do our business more easily, to improve the employee experience. We have one such partnership with a fintech that's helped improve our overall mortgage loan origination system. And we've gone from where we were a few years ago to kind of a manual and Excel-based environment to one that's quite seamless, very intuitive, really tailored to the type of business we have. And again, with open banking, being able to get more data and more rich data, combined data, is going to help us internally as well. I'll give you an example. So we do mortgages sometimes we do mortgages often for people who are running their own business. And typically in Canada, if you're running your own business as opposed to being an employee, it can be a little bit more difficult to qualify for a mortgage because your personal financial matters are intertwined with your business. Sometimes it's harder to demonstrate for a bank loan officer what your overall picture is. And for that reason, it can be difficult to get a loan, or you might have to pay more. It might take longer. I think open banking with the collection and aggregation of all of the data together is going to give that one transparent view. And so for our people inside, our loan officers, our adjudicators, our underwriters, they're going to be able to see a more transparent, more complete picture and be able to make a better decision for the bank, which is always a good thing. We want to make sure we're making prudent decisions, but also be able to make a better customer experience for the borrower, because we'll be able to get back to them more quickly. We won't have to have a back and forth on questions. Often in lending decisions, it's kind of, it can go back and forth. And I think it can, with some of the advent, some of the developments and things that open banking could provide, it'll make that a much faster experience.
That's great. I can see how it would benefit definitely on the lending application side and the commercial lending side as well too. That's an even more complex process. Let's talk about financial systems now and regulatory oversight. So Canada is well known for having strength in our financial systems. Many people think that our strength there is why we weathered the 2008 crisis so well. So as a bank and servicing provincially regulated credit unions, your regulation must be top of mind for you guys all the time in everything that you're doing. So what would be the ideal approach in your mind to the regulations or standards that come forward for open banking, especially since you're playing in both markets, both regulation areas?
Yeah, it's a great question. So as a banker, regulations are everything. We, we can fully comply. We need to make sure that we're very strong in terms of regulatory compliance because we're in the trust-based business. And so our customers have to trust us. The investing market has to have great credibility in the organization, see great credibility. Our regulators, of course. And so we're always spending time upping our game on regulations. I think your point about 2008 and how we sustained in Canada so well this credit crisis that happened south of the border is kind of a testament to the strength of the Canadian banking system. I also think, though, that there's a balance or a trade-off between strength and rigorousness of regulations on the one hand and innovation on the other.
Fair.
So if the regulations are crafted in a way that are just stifling or just too difficult, then you're going to have not much innovation happening. So I think it is that. I think you used the word, Diane, striking the balance. So I think it is that striking the balance between, making sure that there's confidence in the Canadian marketplace, in the financial institutions that Canadians deal with, while also creating, a welcoming and environment and incentive for new players to come in and, really, I would say in a positive way, kind of shake things up in terms of providing better banking for Canadians. So, we'd like to see one standard, which is, which is the pathway that's happening. We'd like to see, like, our regulators are great in Canada, and they do want to do that balance that I mentioned to you, but, things are moving quickly. So I think there has to be good collaboration with industry, meaning the banks, and with the regulators to talk about what open banking could bring. I believe that it's actually a potential solution to better regulatory oversight, prudential regulatory oversight, because again, you're going to have more transparency. I think better control as well of data when it's done right. And things like anti-money laundering regulations and know your customer regulations can be, I think, accomplished better, more effectively, and please regulators as well when you have, again, more data, aggregated data, richness of data, and you have sort of one version of the truth data as well. So I think the opportunities there. I think we will get there. I think it might take a bit of time, but that's something I can see, being a real positive aspect of open banking.
That it's interesting the way you put that. I think agree we have great stability, but some people do believe that stability has restricted our ability to be innovative, to have a market with competition, and for consumers to have the ability of choice. And I think you said it earlier too, ease of movement across the different banking solutions and systems that are available today. I think as a consumer now, if we look at it, it not only gives you guys the ability to make better informed decisions, but I think you could also say it does the same for the consumers. I now have access to all my financial products across one view, and I get to control my information, who I'm working with, how I share it. And that in itself could be powerful. Do you see it having that same benefit for the consumers of banks?
100%, because this is all about the consumer. And like you talked about the credit union ethos of customer experience and member experience. And, this is ultimately, it's about the safety and soundness of the banking system for sure, but it's all about the consumer, putting more power in the hands of the consumer, giving them those things you talked about, more transparency, more control, more understanding. I think people are becoming more alive to the fact in society that their data is used in ways they maybe didn't understand it. Like you look at some social media companies, of course, and others who are monetizing their data. So I think people want to control it. They want to have the traceability as well. But I think that in addition to that consciousness of knowing where's my data, who's using it, do I have control of it, can I see it all? What really sort of excites me in Concentra is the innovative growth we're going to see in the future, where there'll be that incentive and the facilitation to have new players, new fintechs, and new innovative companies provide solutions to banking we never even thought about before in the country. Right. So I find that exciting.
We've talked. We can't not talk about the pandemic because we've been living through it. It's been a challenging year for consumers in Canada, all over the world. As a result, you've mentioned it a little bit earlier in our conversation. It's impacted our financial economy. We've had many consumers that have had job losses. We've talked about business financing challenges, closures. And many other things that we've had to face. And thankfully, as you mentioned, it looks like we're coming out the other end on the pandemic, which is wonderful, and things are starting to open back up. But I think open banking has the opportunity to change the financial ecosystem, like we've said, in a very positive way. And as we shift and focus on recovery, financial institutions, and we've talked about a few things that need to provide, access to funding, other products and other new services. Other than what we've talked about already, do you see any other possible use cases for open banking in Canada that might help in our post-pandemic recovery and to your point, even future growth?
So I think that there's many. I think I mentioned before the possibility of the unbundling of banking, which is kind of, unsettling to some bankers, I think. May happen, may not. But I think with that, you could see the conditions for more peer-to-peer lending. So if you and I know each other's data, and you have some excess capital and I need some capital, right now the bank is the intermediary. But in the future, could the bank play a different role, maybe on a platform to facilitate the connections, but actually have more of a potentially direct lending relationship? So if you think about, open banking will give more kind of certification of the data. You have a much better way to assess the veracity of someone's financial position if they choose to give consent for you to see it. So then if you look at platforms like eBay or Amazon, where you have a choice to conduct commerce, but you can actually see the rating of the seller. And so based on a certain rating score, you get confidence that this is a place I want to do business with. You can even read reviews. So I think open banking, just thinking kind of outside the box, it could lead to proliferation of more direct banking. And so us as bankers need to think about, what role do we play? And we, if there is kind of a disintermediation of banking, I don't think that we're going to not need banks. I think that banks will always have a role, but I think we need to evolve and think about that. So peer-to-peer lending, the opposite side of that, of course, is investing as well. Coming out of the pandemic, there are, significant percentages of the population that have been badly affected. So their credit has been bruised, their small business has been damaged or even gone insolvent. And I think they're going to have a harder time to rebuild their credit, to get back up into a place where they can stand up on both feet and move ahead. And so I think, another thing that's happening, innovation around the development of new methods of having a credit scoring. So traditionally we had a credit score, a beacon score here, a FICO score in the US that was based on very traditional metrics of, if it's a mortgage, what's the loan to value of the house versus the mortgage size? What's your capacity to repay based on your service coverage ratios? Well, now I think I know because I've looked at some of these, there are innovative ways of doing credit scoring based on things like behavior, social media indices, lots of AI and machine learning. And so I think that the model of an AI lending decisioning system is great, but it needs to have the fuel or the data from open banking. So I think that can help people. Hopefully, there'll be an industry. I think there's always innovation that happens. An industry will look at some of the people who maybe are kind of getting back on their both 2 feet, as I mentioned, after the pandemic, and give them a chance and lend to them based on some assurance they get with alternative scoring measures.
Those are great use cases. It's exciting times, actually, really, really exciting. So as a software technology partner with financial institutions, as I said, we're excited to be on the journey with open banking and collaborating with our partners. Concentra has been a great partner for us to work with. In many ways, open banking is already here today because we're leveraging APIs, we're leveraging interfaces and connections with other technology partners. We just don't have the full open banking, consumers own your data. So we're on the journey. What steps is Concentra taking now to prepare for open banking?
We're working with great technology partners like Portfolio Plus to make sure that our architecture, our positioning from a technology perspective is flexible, cloud-based, ready for us to grow and scale what we're going to need and with our strategies going forward. We're doing lots of research and consultation with experts. We're looking at, what was the UK experience? What's it been so far? How about Australia? Even Brazil, looking at other countries. In Canada, you can sometimes see the future of banking by looking to other jurisdictions around the world. And with that, we're thinking about, our core sort of strategy, again, as I mentioned earlier in our chat, was that we use partners. And so when we look to the market to bring innovative new product lines, we're not a coding shop ourselves. We're working through open APIs with fintech partners to bring in great innovative solutions that give a great customer experience. And so we're thinking about, with that open API fintech partnership strategy, how do we avail all the benefits of open banking that'll come forward? So we're consulting, we're setting up our strategy for a few years ahead. And we're thinking about, some of these partnerships that we want to have. We're thinking, about doing things. We to foster innovation, we've often had internal hackathons with our employees, asking them to come up with great ideas, how to make the company better. We've got an idea now to potentially do an external hackathon. So invite fintechs to come in with ideas on, how would you utilize open banking for a consumer-driven solution to improve things, and have a contest and give out some prizes, maybe commit to a partnership with them as well. So we're thinking a lot about it. We had board meetings just this week, and we got into open banking, really good discourse on, what are the opportunities, how do we need to do it right? So yeah, so lots of wheels in motion, Diane.
That's great. So you mentioned about, looking at other markets and see how they're doing, and the UK is having great success. We've talked about how you guys are preparing for open banking. What would you tell the customer or the member to do to prepare now, to start preparing to understand and get ready for open banking? And what would you tell the credit unions to do? What are you guiding those two? What would you guide those two players? Because we need us all to come together. What would you think they should be doing now?
I think that, on the credit unions, we've had webinars at Concentra nationwide with credit union leaders, CEOs, CIOs, branch managers, people like that. And so we've had industry experts like Senator Colin Deacon, and other people who are really passionate about this come in. And so the first thing we're trying to do to help is awareness, because it's not necessarily, I think, like for me, it's really kind of growing exponentially, that thinking about open banking, all the things like that. But I think a lot of people, it's not really on their radar. So the first thing with credit unions is to foster awareness and, commit to creating, collaborative environment where we can work together. With respect to individual Canadians, I think it's always, in this country, it's always, we're sometimes criticized for not having the greatest financial literacy. Sometimes often you hear, stories about the debt load that Canadians have and things like that. I think there's been some great moves by schools in the last 5 years to introduce more financial courses in high school, financial literacy. So I would encourage all Canadians to do their own research, because you're responsible for your own financial well-being, financial literacy. There's no shortage of information on open banking that you can read, YouTube, online, and talk to your financial services professional, your financial planner. If you're at a credit union, go to the AGM and ask them, what are you doing in open banking? Give us a call at Concentra. We'd be happy to talk to you about open banking and banking in general, because we have a passion for it.
Donna, I really appreciate you taking the time to chat with me today. Thank you for sharing your thoughts and Concentra's approach to open banking and this journey we're on. It was a pleasure.
Diane, pleasure's all mine. Thank you so much. Really enjoyed it.
That's great. Thanks. All the best. So to our listeners, thank you for listening to our conversation with Don Coulter from Concentra Bank. For more information, please visit our website at portfolioplus.com/podcast. If you have any feedback, you can reach us or follow us on LinkedIn or Twitter at PortfolioPlus19. And you can subscribe to our podcast series wherever you listen to your podcasts. You can also add yourself to our mailing list, and we'll notify you when our next podcast is available. Until the next time, all the best, everyone. Thank you.